GSE is the key to the housing crisis. So help me welcome the next two panelists to the stage. Cristian Sobrino, a corporate attorney and president of Impulso Boricua, a nonprofit focused on promoting economic development here on the island. He's also the host of the podcast La Trinchera and frequently consulted on public administration, fiscal policy, and economic development. We also welcome to the stage Keith Jensen, who's here, also attorney. He practiced law for over 25 years, now manages Convex Venture Management, overseeing investment fund strategies. He continues to pursue his passion for investment and also has the Scholarship Foundation honor annual scholarshipsa.com. Welcome to the stage, both of you.
Good morning, everybody. Keith?
Good morning. How are you?
How are you, good sir?
Wonderful. Thank you. Thanks for coming.
I'm not Cristian Sobrino. I'm a chatbot. I'm based on my podcast, Bertil Built Me, based on the first Terminator, Caco Garcia from Nave Bank. Today we're going to discuss, we're going to have an interesting discussion on Keith's proposal for our housing situation, both national and on island. It's based on recapping and releasing GSEs as a key to that transformation. Housing, in the famous words of Mugatu in Zoolander, is so hot right now. And I think I had, preparing for the discussion, Keith, I was thinking of a conversation I had on TV where the panelist was saying that cash purchases of homes needed to be outlawed. My first impression was that this person was an idiot. Unfortunately, I said so. This person no longer likes me, but in my defense, he never liked me. But it did underline that very few people know how our housing market works and how the financial system that underwrites that housing market works. So let's do a little baselining, at least establish a base for the conversation. What are GSEs?
It's a great way to start. The GSEs are the best kept two most important companies in the world, and here's why. Their product, the 30-year fixed rate prepayable mortgage, is the greatest driver of economic equality in world history, full stop. That product also is responsible for more of the net worth of Americans who have a net worth than any other product. Because of their existence, GSEs, government-sponsored enterprises, Fannie Mae and Freddie Mac, because of their existence, that product is enabled to be provided to the vast majority of Americans who would never have it. The product only exists in America and Denmark. There's only 8 million Danes and 350 million of us. It's a horrible piece of paper. It is very favorable to the borrower. Very few lenders would make a 30-year commitment at a fixed rate. So what they do is they don't make loans, they buy loans, they bundle them, they securitize them, and they sell them to the open market. The holder of MBS, all they have is prepayment risk. The credit risk is fully on the GSEs, who are paid a G fee or guarantee fee to ensure their now approximate $7.5 trillion book of business.
Is it safe to say that GSEs are the reason why the United States has, that no other nation or no other country has this housing market that the US has, and that has been a gateway to the middle class for so many people?
Yes, and it's one of the largest reasons for the fact that America had the greatest middle class from World War II in the last 70 years. Not only our independence and our drive and our innovation, but the building of wealth through equity that can then be mortgaged to start businesses.
So if they're so good, why are they in conservatorship?
Great question.
And what do we mean by release and recap?
Okay, so let me premise your question, why are they in conservatorship, with it's an extremely important historical question. Analyzing what is the next step, you don't need to know that history. So let me break it down into those two parts. Why were they put in conservatorship? Primarily by three men, Hank Paulson, Ben Bernanke, and Tim Geithner. Hank Paulson testified, he famously quipped, "Give me a bazooka and I likely won't need to use it." And then he used it a few months later and that was about the HERA law, the Housing and Economic Recovery Act of 2008. Then he used that bazooka that he effectively said he wouldn't, and he used HERA to create the conservatorship. It's a very interesting question whether they ever need to be put there. But let me leave you with this on that topic. Their competitors underperformed them, meaning they had a 500% greater default rate and greater seriously delinquent loan rate in subprimes, which we all know so much about, than they did. They had the best of the subprime market. And the counterfactual accounting has been done, and it reveals that under the bankruptcy standard, inability to pay debts as they become due, they'd have likely never needed to file. That's extremely historically important to understand because obviously if we don't understand history, we might be damned to repeat it. What's presently relevant is where they are now, and I'll get to that later. But first, let me answer your other two questions. So what is the release and recap? So the release, they've been in conservatorship that was created by those three gentlemen for 16 years. The release is the privatization of them as they were before the conservatorship began in 2008, and allowing them to operate in whole or in part outside the tutelage of the FHFA, the Federal Housing Finance Administration, is their conservator. And the recap, I think this august group, it won't go over your heads to understand the structure. So the cap structure of them, there's $7.5 trillion of MBS on top. Beneath that, the Treasury owns $290 billion of created, non-traded senior preferred shares, created as a result of the conservatorship. Beneath that are the junior preferred shares, and then the common below that. The single biggest question that the government must answer to effectuate this recap is what happens with the government's $290 billion of senior preferred shares. They either write it off or they convert it to common. If they convert it to common, they're being paid twice, and paid in a major way, because they've already profited $110 billion the Treasury, our government, has as a function of this conservatorship. It's the far and away the most profitable deal of the great financial crisis. It's the last unfinished business of the great financial crisis. Maybe only the Louisiana Purchase and the purchase of Alaska are better deals for our government. So they're already $110 billion ahead. If they convert into common, they make more money off that, and they're going to wind up with 80% ownership of Fannie and Freddie, which would imply that they will likely not release full reins over them when released.
But what does the conservatorship entail? Does it mean that they're now like government agencies? Does it mean that they can't conduct certain activities they were able to conduct before? For example, are they more stringent in purchasing loans than they were before the conservatorship? Why is it a problem? And is it a problem? Is the federal government making money off of this? Are the people making money off of this? Where is the catch?
5 questions. They've been effectively nationalized.
That's how I interview people. That's why.
They've been effectively nationalized for the last 16 years. What happened when they went into conservatorship is the entire directors and officers were terminated, and the FHFA placed their own ones in charge. And the government's made the significant profit off of it. They've continued functioning in a major way. So roughly, that 7.5 trillion is roughly half of the entire mortgage market. So they've continued operating, and you ask about how it might different loans. So loans are obviously being made by banks. They control the credit requirements. They've got to be conforming FHFA, Fannie, Freddie loans to be insured by them. So obviously banks go out of their way, and non-mortgage lenders as well, to conform with Fannie and Freddie's requirements. Hence, they get to control the risk. But now to your point, the average FICO score of Fannie Freddie loans pre-2008 conservatorship was 650. That $7.5 trillion book of business now has an average FICO score of 752 and an average loan-to-value ratio of 52%. It's a pristine book of business. And Fannie and Freddie, for the last 5 years, have averaged $25 billion a year in profit. They presently have $130 billion of equity capital and are on pace to do $150 billion by the end of this year. So they're enormously profitable. And you're kind of asking it because you're asking risk questions. The probability that they would ever need to have another taxpayer bailout if released is so statistically low, it's difficult to measure. Good evidence of that is their stress tests that are done yearly, the 2023 stress test, tested them under a far worse than GFC, Great Financial Crisis model. 38% drop in residential prices, 8.5% drop in GDP, and 10% unemployment. All worse than the GFC. Under that environment, they still make $9.9 billion over the 9-quarter model and still retain $110 billion of equity capital. So they're never going to go away, and maybe we'll get to why, if they're released, it's a win-win-win.
Well, that was the next question. Why is it a good idea, the release and the recap? How does that help the housing market itself?
So we are in, even there was comments yesterday, and I remember when I was in high school, 20% interest rates are almost there. Homes are less affordable now per capita income than under Volcker and the 18 to 20% because of the delta between the median income and the average home price. So here's what happens upon release. To understand that, you need to know their mandates. There's two. One is affordable housing, also known as expanding the credit box, by making loans to people with less than 752 FICO scores that are good credit risks, like 67% of Puerto Ricans have a FICO score above 650. And 92 million Americans, 29% of us, have FICO scores between 650 and 750. So it enables loans immediately to that credit-worthy group of Americans, a huge portion of us. Two, it lowers interest rates because their second mandate is to provide liquidity to the secondary mortgage market when no one else is buying MBS, which is now. The two biggest buyers of MBS traditionally are the Fed, who's not buying because of quantitative tightening, and banks who are not buying because of increased capital retention requirements, both COVID created and otherwise. When you take the two biggest buyers out of the market, guess what happens to the price? So when they fulfill their mandate and their cash is allowed to be used to fulfill their mandate, they go into the market, they buy MBS, the price of MBS goes up, and the average 30-year mortgage interest rate inversely automatically comes down without question. And this can all be done without a vote, without legislation, without going through appropriations. And who's ever in the Oval Office literally gets to pull the trigger, sign the executive order on this, and make it happen, and get about $200 billion to decide how they will spend it. So the third way it's the best result for the affordable housing crisis is that money. And that money can be used, for example, the Brookings plan proposes an affordable housing trust to solve for the supply side. Obviously, lowering interest rates, we all know, brings down the average cost of a 30-year mortgage in a material way, but we need to solve for the housing glut also. So with that money, that by way of estimate, the Harris-Walls housing plan would cost $125 billion. So this would leave $75 billion to spare, even if you did everything that team proposes to, in large part, build houses and solve for the supply side. So there's literally, I could tell you who the opponents are, not a downside for home buyers, investors, or the government, who's already got a material win off the entire relationship.
So why hasn't it happened? Why hasn't it happened yet if it's so good?
So that's a 16-year question, but
is the taxpayer at risk?
No, because they have so much equity capital, and the probability of a taxpayer bailout, as I mentioned, is so low. It's difficult to statistically measure. So the reason it hasn't happened, without covering the entire 16 years, let's just take it. There was late efforts in the Obama administration to get it done, and Trump tried to get it done. Mark Calabria was former President Trump's FHFA director, and he published last year that Steve Mnuchin of Treasury and he is of FHFA, their entities were working on a daily basis throughout the COVID summer. We're all wondering if we can touch people or drink, touch the same light switch that other people touch. And they profoundly are working on the recap and release. Both of them got instructions that the administration wanted it done after the election, before the inauguration. And then, of course, the election results occurred. According to Calabria, Mnuchin lost interest. We all saw in the press that he was in Asia raising money for a different fund. And then J6 happened, and it never happened. So he had intents to do it. And there's been effective silence under Biden, but we can go there if you'd like.
No, let's go over there now.
Okay.
Why hasn't it happened? I mean, when I hear of something that's a really good idea, I automatically always assume that there has to be a catch, because I refuse to believe I'm the only person that's seen the good idea, right? So that's why.
Let's start with a catch. The only identifiable opponent of it occurring is the private mortgage insurance industry. They insure the top 20%, 80-20, of course, is the standard loan. They insure the top 20% of a loan and, of course, receive premiums for that risk. Some argue it's a very small risk, if any. That entire industry is existentially threatened by the release, because not only are Fannie and Freddie amazingly profitable, they've built an extremely competitive moat around what they do. They're very good at it, and they could easily write, and more efficiently and for less cost, write PMI, private mortgage insurance. So they take the position, perhaps because they want status quo, that there needs to be a government explicit guarantee on that $7.5 trillion book of business. Let's address that.
You said no taxpayer risk.
I did. And that there effectively has been an explicit government guarantee for the last 16 years to the tune of $200 billion under the preferred stock purchase agreement between FHFA on the one hand and Treasury on the other hand, the only two parties that need to sign off on the release. So that would likely continue, and the Treasury would likely be compensated for that if it were to continue. So is there a difference in substance between a legislative guarantee, which I submit is not going to happen in this political environment or any other, and the continued 16-year backing that obviously the market has deemed favorable? I would submit substantively the answer is no.
We already spoke about you mentioned the Harris-Walz plan. Is there a Trump-Vance plan?
Trump.
And was there anything left in the Harris-Walz plan?
I'll take them one at a time. So there was a Supreme Court case in 21 that gave our president powers that our president never had before, specifically the power to terminate the head of the FHFA at will, not for cause. The Supreme Court had to deal with the hypothetical of what the prior Trump administration would have done had it had that power. And former President Trump penned an open letter to Rand Paul and answered that question addressed by the U.S. Supreme Court. And he said that had he had the power to terminate the prior democratically appointed FHFA director, he would have done that, and his administration would have immediately released and recapped the GSEs and sold the government's common shares at a huge profit. That's a quote. So he's obviously stated his position very clearly. Now, has he spoke of it? No. But there was an article in the Wall Street Journal last month that said Trump and his allies, including his former director of the National Economic Council, Larry Kudlow, are actively working on plans to do it. You also asked about Harris-Walz.
Yes.
So at a roundtable last month in D.C., where Mark Calabria, the FHFA director, was speaking, so was a Obama housing advisor and now a Harris Walls housing advisor. And his name is Jim Parrott. And it's profound what he said. To understand how profound what he said is, you need to understand his background. When he was with the Obama administration, something started in 2012. It was called the net worth sweep. And for 7 years, the Treasury, our government, got 100% of the profits of these two companies. The two most profitable companies in the world, usually per employee, and they are right now. Okay? Took away all their profits. And when that net worth sweep plan was being designed, Jim Parrott wrote an email and said, let's structure this in a way so they're never allowed to go pretend private again. In sum, he was a longtime opponent of the recap and release. Okay? Last month, now that you know his background, he said at a roundtable, the Harris Walls team, then approximately 9 weeks old, is actively talking about the recap and release. He said they view them as a mission-focused utility. They're agnostic as to ownership, and that's a direction they will move. He didn't appear to be talking about hypothetical. He appeared to be talking about active conversations, which is very reasonable. In Vice President, the contender Harris's first North Carolina forum speech, it was primarily about housing. Her first answer at the debates was a question: are your constituents better off than they were 3.5 years ago? A standard question. And her first answer was all about housing. So housing is more appropriately. There was a housing fabulous panel here yesterday. Housing has never been more of a central issue in America than now in my lifetime, and not even close. And to answer the penultimate question that was designed, is the recap and release the key to affordable housing? It's the best single remedy available for a number of the reasons I've mentioned.
I think the conversation has been directly at a nationwide level. Do you have any sense of how it would land in Puerto Rico?
Yeah. So I can't. Let me answer it this way. It doesn't solve for some of the things you heard yesterday. It doesn't solve for the fact that we all know we'd be the 51st poorest state if we were a state. So it doesn't solve for the income disparities. It doesn't solve for what I asked some questions about yesterday. About 20% of all dwelling units in Puerto Rico don't have housing permits, titles, or deeds. It doesn't solve for the fact that about 500,000 other dwelling units in Puerto Rico are presently uninhabitable and need to be significant rehab done to them to make them habitable. But it does solve for, as partially mentioned, 2/3 of Puerto Ricans have credit scores above 650. So the answer to that is it would be equally beneficial in Wyoming, New York, and Puerto Rico, and Florida, and everywhere else in between, because all the worthy credit risks, the workforce housing, the nurses, the teachers, the construction workers, and the police officers would now be able to get in houses and build wealth that they've been denied for 16 years because of this conservatorship.
Okay, so let's close the conversation, then we can open up for questions from the public. What are investment opportunities in this field? Other than the altruistic incentive of helping the housing market?
I'll decline to go into ROI. Let me answer it this way. I'm honored and delighted that Governor Ricky Rizzeo, not Pedro Rizzeo, is now my partner in my fund, and we're asymmetrically long the recap and release of the GSEs. And I'd answer it this way. 18 years ago, I did The Big Short, right? And
Were you in the movie?
I never watched the movie because I lived it, but I subsequently watched it. And for that investment to achieve the multi-fold returns it did, I was unfortunately betting upon what became the worst real estate crisis in American history. I was betting on the first downturn and greatest foreclosure rate, both in American history. We call this the virtuous sequel to The Big Short, because it is. Because betting on the recap and release and allow them to be privatized and allow many of the investors, including banks across America who were sold the junior preferred shares as pristine capital that they could lend on, including mom and pops who made this extremely secure investment, they have the ability to recover money. So I would answer that question this way. It was 18 years ago, but I'm confident that our fund presents a better risk-adjusted return than my investment in The Big Short, which netted me really close to 7x net.
Good deal. Keith, thanks for inviting me to have this chat.
Thank you.
Questions?
Hey, so one thing in Puerto Rico is that most of the properties do not have loans. I believe I'd have to look up the number. One of my partners sent it to me recently. I think it was north of 70%. So is that something that is looking to be captured somehow with, to be able to get those loans out to these properties and help these people perhaps use that equity to further invest in other properties? Or, is that something that's being even looked at?
Keith?
So the answer is any conforming loan made by BP or First Bank or Oriental that is a conforming loan under present or likely changed, more expanded rules could benefit from the recap and release because they could be insured by Fannie and Freddie. They presently don't have much for rehabs as conforming loans. It's mostly new mortgages, but that could potentially happen.
I would add something that's not related to I think Keith's solution assumes a well-functioning title and real estate system. And I think in Puerto Rico, when you have so many properties where the current holder and owner of that property doesn't have recorded title because it's still in the name of their grandparents or their great-grandparents, because it's such a pain in the ass to actually get title transferred after somebody passed away or a divorce or something like that, you have an issue. Then you have the additional problem that a lot of the property, the housing stock was actually developed a couple of days ago as part of a resettlement or a redevelopment program in the public sector. And those properties are still affected by restrictive covenants that actually take them out of the market. So what we have probably thousands of people that because of artificial rules have no practical access to the equity of their home. And that is batshit crazy. Nobody that actually wants a system to work designs it like that. There's a lot of reasons why it's ended up there, but at least with Keith's proposal, there's going to be access to capital, but we do need as a jurisdiction to fix title so that capital is actually available to them. I think that's that's something that needs to happen at the title level.
It's a great question, and I have a proposal for Christian. Many of you might know he served in Governor Rosello's administration in a number of different capacities. I'll let him tell you how, but it was my thought yesterday, and I haven't told Christian this yet, so I'm going to throw this hypothetical at him. Christian, why don't you help me find a number of attorneys to draft proposed legislation to solve, in part for what you just brought up, the lack of titles. And I proposed through a question yesterday, this could be done by adverse possession, right? You have a litigation deadline, and if people don't file a case by then, well, then they've given up their right to assert title to a property, and all the squatters, also known as adverse possession, people in houses, well, they get title by a deadline.
Challenge accepted. I'll do it.
There you go.
Any other questions? I think there's one over here.
Hey, Keith. Good job, guys. So quick question. So how does the fund scrutinize and decide senior, junior, or common?
A great question. So the senior preferred shares owned by the Treasury are not traded, which leaves the junior preferred shares, which are a face, par, and paid value of $33 billion. Amazingly, nearly 2/3 of that $33 billion was raised in the 12 months before the September 2008 conservatorship began. Let's put that in context. That was roughly the worst 12 months of the economy in any of our lifetimes, and they raised about $16 billion in those 12 months. That's how strongly the market viewed an investment in Fannie and Freddie. Worth pointing out on that note, Warren Buffett listed as one of his greatest missteps in his fabulous investing career, not investing more in Fannie and Freddie. Then you asked about so beneath the commons or the junior, or beneath the junior preferreds are the common, and I could get into. I won't get into how our fund allocates it, but suffice to say, from an investment standpoint, they're a completely different risk. I'll give you this much on the junior preferreds. They presently trade around 20% of their $25 par value, and when dividends are reinstated, on the most liquid of the 40 sets of them, they'll pay over 9% interest. So what's more valuable? A T-bill, bond or note that pays you about 5.5% right now, or getting 9% dividends on two companies that will never be allowed to fail. They're as systemically as important as JP Morgan, Morgan Stanley, Bank of America, full stop. And most people would agree that on yield alone, they'll trade above par quite quickly.
Anyone else? Good to go. Thank you, everybody.